Good evening. This is Byo from London. It's Thursday, the 21st of July, and the currency pair I'm looking at today is the euro dollar on a daily chart. My bias is to the downside, so I'm looking for price to literally bounce off this trend line before before I trade this to the downside. So that's the plan. So we've got price approaching resistance defined by the line drawn from the June 06 high and the July 03 high. So that's the plan to trade down to the downside. And in terms of entry order, if you go to a lower chart or 1 hour chart, you can see a bat pattern forming from the July 03, which is from the point X here. So literally from the July 04 high, there's a bat pattern forming, which is about to complete in a couple of hours, hopefully, because price is near the point D. So what this does is this is a profile pattern, which is a 5-point structure where point B is less than 61% retracement of the XA leg. XA leg. Oh, oops, sorry about that. Yeah, the XA leg. So the idea is this pattern defines a resistance zone between 14449 and 1.4491, and this zone actually coincides with a resistance on the daily, which is this green line drawn from on the daily. So you can see around this area, the green line, which is the resistance from on the daily chart, coincides with the resistance zone defined by this butterfly pattern on the hourly chart. Oh, sorry, bat pattern on the hourly chart. So the plan is to place an entry order at within this zone, this resistance zone. So the upper bound of this zone is 1.4491. So I'll have my entry order at 1.4487. There's a couple of feet below the boundary, just to give allowance for pip spread and pip cost, or whatever it's called. In terms of stop loss, literally this trade will be invalidated. This trade setup will be invalidated when price close above this point X, which is 1.4577. So if you have an hourly, maybe 2 or 3 hourly daily candle closing above this pattern, then this trade will be invalidated. But obviously, if these candles that close above it are bearish candle like a doji or some kind of bearish engulfing pattern or evening star, something like that, then that's telling me the upside potential is limited, which means this pattern will still be valid. So if 2 candles or 3 candles close above this point X, if they are a bearish candle, that doesn't invalidate this pattern until we have maybe a strong bullish candle closing above this level. So that being said, I'll be placing my stop loss at 1.4610, just above that psychological barrier, in case price pierces that zone and falls back. I don't want to get stopped at. So that's the entry order at 1.4487. Stop loss at 1.4610. And in terms of profit targets, the first profit target is the next support at point B, which is just between 1.4300 and 1.4280. That's the first profit target. If you look at the rally from point A, the rally we had this week on euro dollar, you can actually see a trend line from delete. You can actually see a trend line forming up here. So if I join point A and point C, you can see a trend line forming up here. So if price did reverse from this point D, then price should be capped above this trend line. If euro is gonna continue rallying, price should literally bounce. This trend line should hold. We shouldn't have like a daily an hour close below this trend line. And you can see this trend actually coincide with point B at some point here. So in terms of profit target, you might not hit the profit target by the end of this week. It could be next week. But that being said, the profit target is 1.4300 to 1.4280. Now if price closed below this level, this 1.4300, and below this trend line, then we've got some downside potential, which could be managed by a Fibonacci retracement of the AD leg. So if I just draw a Fibonacci retracement of the AD leg, that's, we got 88.6, 61.8, and 38.6. There. Now assuming the D leg and the D point is in this zone, so that will be a Fibonacci. That will be so that's three price levels. So if price close below that trend line, below this B point, and below 38.2 retracement, and then which is 1.4237, and the next level, the next target will be 1.484. Now ultimately, if price close below the 88.6 retracement, which is 1.3911, then there's more room to the downside. Obviously, that's pretty ambitious, but at the moment, the profit target will be 1.4, around 1.4300 to 1.4250, just around this zone here. Now if price continues further and it closes below this level, then I just want to basically take partial profit here, and if price closes below here, then just leave the remaining position and manage your trade. Just trade my stop accordingly and see what happens. So that's the plan. One more thing, if you look at RSI, you could see the rally today takes out this high at this point B, but RSI didn't, so we've got some kind of divergence here. And the last time RSI was at this level, we had roughly more than 250 point retracement from 4280 to 40010. So that's literally like 270 pips retracement. So I don't know if that gives you confidence, but so we've got some kind of RSI divergence as well, right? So to summarize, I wouldn't go short right now. I would for price to tag to go trade into this zone. So I have my entry at 1.4487, stop loss at 1.4610, and open objective first target at 1.4300 to 1.4280, and if price close below the 88.6 retracement of the AD leg, then there should be more room to the downside. So that's it for today. Thank you very much for listening, and good luck with the rest of the week.